Hi everyone and welcome to today's morning report on Wednesday the 30th of September with me, Rich Perry, market analyst at Handset Markets. European trading session again very volatile, big bounce at the open. There's not really been any real catalyst behind the move, but certainly there was a turnaround in sentiment as safe haven flows began to reverse in the Asian session, and that has sort of filtered through into European trading. Asian markets overnight were strongly higher on equities, Nikkei up 2.7% and pretty much green across the board, and that is sort of filtered through, as I said, into the European session as sentiment has improved. Now just looking at a few of the sentiment gauges that we've got, first of all the Treasury yields. Now the 10-year Treasury had been consistently falling away, and it's just sort of unwound really, and I would argue that there's not really been any significant improvement yet in this market. Treasury yields are a pretty decent gauge, I think, at the moment of market sentiment, and obviously having fallen away consistently and just unwound that really. So I think it, to a certain extent, this move could still just be a bit of a dead cat bounce. We've still got volatility certainly on the US markets, pretty elevated. 26.8 on the VIX is pretty high still, so pretty volatile markets there. Shows that fear is still quite high. Moving on to the dollar, still pretty much sort of trading around that 96.3 mark and not really sort of making that move yet, and it is sort of strengthening the dollar against certainly cable, and there's a big move on cable potentially underway, but again my comments on that are still to be seen. And what we have got is let me just see the 2-year Treasury yield, which has improved slightly on the back of this improvement in risk sentiment as well. So there is a slight improvement going on, but whether it can last remains to be seen. Now there's quite a lot of data out today, and what we have got is let me just find it, is the, first of all, 9:30, the UK GDP. This is the third reading of GDP for the UK at expectation at 0.7%, so again in line with what we saw last month. And probably more importantly, actually, we've got the current account balance for the quarter, and that's expected to improve again to minus 22.25. So that would be the third quarter in a row of improvement on that current account balance. Then at 10 o'clock we've got the Eurozone CPI, the flash look at the CPI data. Unfortunately this chart is annoying and it doesn't show the revision, which was slightly lower from 0.2 to 0.1 last month, and the expectation is for flat again, a move back towards flat on the Eurozone inflation data. So despite all this QE, Eurozone's inflation is still not really picking up too significantly yet. And then into the afternoon we've got the US data. We've got the ADP employment report. Now ADP, some would say, is a bit of an indication as to how non-farm payrolls could go on Friday, but still the expectation is 194, so very slightly higher from 190 last month, but no real change there. So that would suggest a pretty stable payrolls report on Friday. So that takes me to my chart of the day, which today is the euro sterling. Now we've had a big move on euro sterling in the past week or so, and it's now gone through that 73.90 resistance, and you'll see here that is a pretty big resistance over the past 6-8 months. And it now sort of takes us into whether it's going to do the proper breakout, which is a move above the 74.80 level. And if that can obviously be seen, then that would be a big breakout. But I would argue that the momentum indicators are not really showing too much. The stochastics are rising, but they're beginning to roll over. And the thing that the aspect that I'm sort of a little bit concerned with is this RSI. It's at 60. Basically, the RSI at 60 is pretty much where the tops have been seen in recent weeks and months. And you'd want to see, if this was going to be breaking out to the upside, you'd want to see that RSI sort of really sort of pushing towards 70 and then ultimately above 70. And we're not seeing that yet on this on this move. So I'm a little bit suspicious of this one. Now on the hourly chart, you've got an uptrend over the past week or so, uptrend that is being tested now. But again, looking at the momentum indicators, RSI falling over around 70 and the recent high falling over around the 60 point. The MACD lines, similar sort of story. You could argue that's a bearish divergence. So it's just flattering, I think, to the upside on this move higher, and I'm not convinced necessarily by it. Now, certainly, obviously, that 73.90 level is the initial support coming in, and the spike yesterday, or yesterday's low, was 73.80 area. So there's obviously about 10 pips worth of decent support there. So that is the level that we need to look out for first of all, and certainly if that were to sort of complete below 73.80, that would do a little top pattern, which would imply a little near-term correction perhaps, and certainly back towards this sort of 73.30, maybe even the 73 figure level. 73 figure being the near-term sort of support that we had the reaction low on Friday last week. So is this euro sterling move going to continue higher? I'm a little bit suspicious by it at the moment, although you do still have this uptrend, and whilst that is intact, you're still positive to a certain extent. However, I think that you're still under a little bit of pressure, potentially growing to the downside with these momentum indicators. So just watch this space on this one. It's very interesting to do. Anyway, I wish you good luck in your trading today on euro sterling, and I'll speak to you later.